Hi everyone, Brian McKim with House America Financial. Today is Monday, April 13th, and wanted to bring you an update as to kind of what's going on over the last couple of weeks, where I see this going forward, what it means for realtors, lenders, home buyers in this very uncertain, unusual, unprecedented time. Woke up this morning to see some headlines regarding Chase Bank. Chase is the nation's largest depository, one could argue biggest bank in the United States. And they've come out and said that for all transactions, the minimum credit score is now 700. The minimum down payment is now 20%. This is a big change from a few weeks ago where they could probably go down to credit scores of 640 or 620, down payments as small as 5%. So to go from 5% minimum down payment to 20%, it's a really, really big move. Stearns Lending. Stearns is one of the biggest lenders in the country, one of the biggest wholesalers in the country. A lot of brokers use Stearns. They also came out this morning with some guidance, and they've raised their minimum credit scores on conventional as well as FHA to 660. Now granted, Stearns was doing FHA loans with credit scores as low as 580 a month ago. So they've come up to 660, and the maximum debt to income ratio on both conventional as well as FHA is 45% now. Again, a couple weeks ago, they were doing FHA loans with debt to income ratios at 56.99%. And so, every lender is going to be different. House America, Chase, Stearns, different lenders out there. This guidance and this feedback is not a one-size-fits-all type of update. We're not Chase, we're not Stearns. We have our own guidelines that we follow. But I think the big picture here, guys, is what we're experiencing and what we're witnessing is one of the biggest and fastest credit contractions, I would say, across the board we've ever seen. Certainly in residential lending, I would presume in other banking sectors, commercial banking, multifamily, small business banking, they're probably experiencing similar credit contractions, similar tightening, similar guideline changes, and it's really across the board. What I would say is this isn't a negative message, this isn't fear-based, this isn't doomsday, but a little bit of awareness, I think, is a good thing. It's important so that when you're in a transaction, just be aware that things are changing on a daily basis. What's changing? The borrowers are changing. Their employments are changing. I'm seeing borrowers unfortunately lose their jobs. I'm seeing borrowers have to take pay cuts to keep their jobs. I'm seeing borrowers going on furlough. So the bedrock of lending is really income and the ability to repay loans. And when we're in this environment where employment is changing, incomes are changing, it creates a lot of uncertainty. So that's on the borrower side. On the lending side, as we've just discussed, guidelines are changing. Fannie Mae and Freddie Mac, FHA, are directing new guidance on nearly a daily basis to banks and lenders across the country. So when we're in transactions these days, expect the unexpected or expect changes, expect possible delays, expect possible curveballs. About a month ago, 2 months ago, if myself as a lender didn't close a transaction exactly on time or early, kind of meant I failed. It was a bad performance, and thankfully it didn't happen very often, but it's if we didn't hit specific deadlines 2 months ago, it was a fail. And now this is a different environment. Certain transactions are still going to close early. Many transactions are going to close on time. Some transactions are going to close late because of additional verifications of employment, additional pay stubs needed, additional bank statements needed. And that, unfortunately, will just be what it is. It won't close exactly on time. It might close a few days late or a week late, but it'll close. Some transactions in this environment, through nobody's fault, not the borrower, not the lender, not the agent, not the escrow, some transactions unfortunately are going to fall apart because of changes in guidelines or changes with employment. And that's just the new reality of April 2020 with COVID and coronavirus. So just expect that going forward. I would say about 10 years ago, 12 years ago, I was, 26, 27 years old, and I went through something similar. It was the financial crisis of 2007, 2008, and during that time, we saw similar type of actions being taken by banks, by lenders, but it was over a 6-month process, 9-month process where change happened and it felt really fast, but relative to today, it was actually much different. It was actually much slower. What we've seen in the last 30 days happened much faster and much swifter, and in some ways much more painful than in 2008, 2007, 2008, 2009. So it's an unusual time. Looking back on that time for myself, and what I would say to all the agents out there, lenders out there, everyone involved in real estate, that time was pretty uncertain and was pretty scary. And looking back on it, I could see it as a huge blessing. And that period unlocked some opportunities for me that allowed me to have some success in the following years, 2009, 2010, and beyond. And I think if we can persevere and if we can get through these challenging, uncertain times, I think it's going to unlock a lot of opportunities for all of us. But we've got to stick with it. We've got to persevere and get through it. And if we do, when we do, I think we're going to come out the other side better agents, better loan officers, better escrow officers, more opportunities, helping more clients, more knowledgeable, and hopefully more income as well. So uncertain times for sure. I think we could still see some credit tightening going forward in the coming weeks. All that being said, if we can reopen the economy, if we can go back to work, if things can kind of return to normal, it's very possible that a lot of this can be reversed very quickly. I think we could see and will see stated income come back, bank statement loans come back, different FHA loans come back with lower credit scores, higher debt to income ratios. I think lending, as quickly as it's changed, I think it could return back to how it was. But at this moment, there's just so much uncertainty, and that's why we're seeing so much credit contraction, so many guidelines change. So, best of luck. I certainly hope you and your families are safe and healthy. I hope you had a good weekend. We'll get through this. If I can be of any assistance, please feel free to reach out. You can shoot me a text or give me a call. If you just want to talk about a scenario or vent or whatever, I'd be happy to lend my ear and hopefully give you some valuable information. So you can call me or text me, 818-421-4737. And again, wish you well. Thank you and have a good night.